You're listening to New Retirement Radio, brought to you by the team at Prout Financial Design.
Hello, I'm your host, Certified Financial Planner, Dennis Prout.
I'm Heidi Cartwright, Financial Advisor and RICP.
Advisors associated with Prout Financial Design may be either 1. Registered representatives with and securities offered through LPL Financial, member FINRA SIPC, and investment advisor representatives of Integrated Partners, a registered investment advisor, or 2. Solely investment advisor representatives of Integrated Partners, a registered investment advisor and not affiliated with LPL Financial. Investment advice offered through Integrated Partners, a registered investment advisor. Integrated Partners and Prout Financial Design are separate entities from LPL Financial. Dennis Prout and Nathan Prout are solely investment advisor representatives of Integrated Partners and are not affiliated with LPL Financial. The opinions voiced in this show program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriately qualified professional before making a decision.
WTCM News Talk 580. Welcome aboard to New Retirement Radio with Prout Financial Design, Thursdays at 10 o'clock and rebroadcast Saturdays at 9. Joining us today in the studio, Mr. Dennis Prout. Good morning, sir.
It is great to see you here, Ron. Good morning on Thursday, 2/26/26. Thank you for listening. If you do have a question of a financial nature, you're welcome to text or call. That number, if you would, Ron, is?
It's always 231 area code 947-0023, 947-0023.
Joining us this morning, Nathan Prout, our own managing director. Good morning, Nathan.
Good morning.
And Beth Shire, our marketing director of marketing.
Good morning, Dennis. It's great to be here. Love seeing the sunshine out there this morning.
Well, it's all right, isn't it? A little crispy, you know. Before we get into our announcement, I was walking along the bay, and there was a gentleman out there on a bicycle with 2 dogs on the ice.
On the ice.
Bicycle with 2 dogs on the ice, you know. Northern Michigan winter. All right, moving on. 8 questions to ask about charitable giving, maybe to ask yourself. And again, your questions are certainly welcome. So for many financial professionals, the philanthropic component of financial planning is also an important part of job satisfaction. No kidding. It's amazing what you might do if you have any inclination to give. In fact, a client asked me yesterday, he said, well, you know, I've got like 8 different charities that I enjoy giving to. None of them are significant amounts. Could I theoretically do a QCD or a qualified charitable distribution from my IRA? And I said, by all means, Joe. That's his name. But I said, yes, Joe. So reflecting, here's a great question potentially to ask yourself. Reflecting on this year, what significant life events might inspire future charitable giving? So for some, it may be giving after your heart. You know, what especially moves you? Because it's amazing the charities that exist within Traverse City alone and their activities and what it is that they're doing. Another client was mentioning one near and dear to her, the TC Philharmonic.
Yeah.
So, you know, it's just whatever it is.
Sometimes groups will have a capital campaign.
Yes.
Sometimes they have matching where someone says, we'll double your donation if you donate by this date.
Yes.
So, yeah.
Yes. It can work well. Interesting note. Maybe you experienced something extremely heartbreaking. Supporting a charity that helps fund that sort of research, whether it's cancer or whatever. Again, as long as it's a 501c3 organization, a charitable organization recognized through the IRS, you can make an RMD or any sort of QCD after the age of
70 and a half.
Thank you so much.
For the QCD part of it.
For the QCD, even though it's not your RMD age necessarily yet. For most, now, if you're approaching required minimum distribution age, you've got to be 73. Now, so for any born after 1960, I'm not sure there are any on our audience born after 1960. There are some here in our studio. Your RMD age won't be until currently. Yes, Colleen. Yeah, well, yeah.
But your QCD, your Qualified Charitable Donation, the benefit of that is what? You can pull it out of your retirement account. It's not taxed if it
Not
goes right to a
taxed.
charity?
Correct.
Okay.
Because the standard deduction, Ron, is so high now, especially for those over the age of 65 within certain income limits. It might well be $35,000 to $40,000. Your standard deduction as a couple, all right?
Yeah.
Assuming you're married, your marriage, okay? Yes. Next, is there a prominent philanthropist, past or present, whom you admire? Social norms and signals have an impact on charitable giving. So, is there some one person that you really admire that's giving to a particular charity and you thought, well, they've done all the hard work. I'm just going to ride along on the laurels there. Why not? Yeah.
Yeah, and if you're navigating these waters for the first time, there are websites that you can use to help you vet what might be a good charity. One that I've heard good things about is Charity Navigator. Just if you want to dig into the charity a little bit and make sure that they're aligned with your gifts and what you want to do with that.
If they're based in Nigeria, probably you want to probably do a background check.
Hypothetically.
Yes. All right. Warren Buffett, the Oracle of Omaha, and a signatory of the Giving Pledge, has famously involved his family in his giving. Just making sure you're listening, okay? Then next, how would you like your charitable giving to integrate with your estate plan? Now, who wants to talk about death and money? Everyone raise your hands. No.
None have gone up
None.
here.
No,
None.
I don't see
None.
any.
But to the extent that you are trying to incorporate that into your estate planning, what a great excuse and reason to do that. You may have an IRA that you really don't want your two daughters to get because they're both successful on their own. Thank you very much. They don't need more income when you pass. Nice thing. Whose daughters are they? Yeah. Given the reality of your own children's disparate financial success, we can call it the word of the day, can't we?
Disparate.
Disparate. I think I've used it properly. Don't ask the professor.
I've
He'll
never
call
heard
me
that
out
one.
on it. But given their different, we just use a regular word, Dennis, thank you, different financial successes, one may be better off with taxable income. The other, essentially different in kind, not allowing comparison. It could be disparate works. Thank you, Ron, for looking that up. So given the reality of that, you may want to gift one with more of the Roth IRA and the other with the regular IRA, because the one with the lower income, she or he, can pay that tax much more effectively than the other child of you, okay? So you really can do some different things with these accounts. Lastly, and certainly equally as important, is the fact that you may want to decide to give a portion of your IRA to charity at your death, naming that charity as either primary or contingent beneficiary. Why? Why, you say? Well, the spouse is number one. She or he gets it anyway. Well, you may want to name the contingent as the charity in certain cases, because that spouse could file what's called a
Qualified disclaimer.
qualified disclaimer.
If
I'm
it has
teasing.
all of the qualifications. Sorry. Okay.
So, yes. So if he or she decides, I want to just let that pass on to the charity itself, and see the joy that I would have in some cases, again, at seeing the charity get that money, you can file what's called a qualified disclaimer. That's the word. And there's no tax consequence for yourself, and it goes 100% to the charity.
And that doesn't have to be an all or nothing decision, too, on that disclaimer, right?
Correct.
Yeah, you can just disclaim a portion of it, should you choose to do so.
Which is equally radical. Now, I mean, this is really fun and games with money, which we have every week here. Thank you very much on New Retirement Radio. So, just for the fact that you saved and you had that bent, it's amazing the flexibility, the power that you can exert after you've passed from this earth into the next. So,
talk about a legacy.
Yeah.
Right.
Next, what do you know about impact investing? What would you like to explore this further? Impact investing is caught on with high net worth investors. Nearly double the number of affluent investors said they participated in impact investing in 2020 compared with 2017. So we can talk more about that offline for those who might have an interest. So how would you like your family to be involved in charitable giving? Philanthropic habits tend to help build strong family ties. A charitable survey done by Fidelity showed that 81% of consumers who experienced a family tradition of giving described their family as very close. Bring your children in on the charitable giving. They might be more interested or open than what you thought. Talk about powerful. Help them expand their horizons.
So if you have grown children, you could make your whole family in on the same charity, same cause.
Right.
Yeah.
Bring them in on the conversation. And what a great way to bring them in and further on the charitable conversation, too, in trying to communicate to the children what your intents are, why you're giving one child the Roth and the other one the IRA. As a for instance. What is the reasoning behind that? And believe me, it helps them to acclimate to that fact. Next, one of the benefits of having a charitable giving strategy is maximizing your charitable dollars through tax efficiency. Is that something that interests you? Well, it interests most people. Your tax savings can wind up being the biggest thing you can do in terms of getting a rate of return before, at, and after retirement. Is there an after retirement? Yes. Next, how can I best facilitate communication about your charitable giving? You, in many cases, bring this up with your advisor and or your accountant, because they tend to be somewhat reluctant to talk about these things with the concern that they're going to be seen as pushy or overbearing. So bring this up with them. Make it a part of the conversation. And to the extent that they can expand that conversation with you, more power to you, right? What are some of the other ways that you might do this? We've actually written an article for Ed Slott's newsletter, published a couple of years ago, on various forms of charitable giving. So if you'd like it, contact our office, speak with Melissa or Janie. And I've not notified either of them of the fact that I was going to mention this article. That was one of those last minute things. Mm-hmm. But tell them that you'd like a copy of that particular newsletter where I wrote that article about it. And some of it still applies today, even though it's 2 years old. All right? So, sources, some of the sources here, I think an especially good one, generosity across the income and wealth distributions from the National Bureau of Economic Research, May of 2020. So those are some of the ways to think possibly more expansively about how you might give. The last one not mentioned is appreciated assets. If you have appreciated assets in the portfolio, perhaps some of the best giving you might do is giving direct, or giving to that charity direct that appreciated asset. Mutual funds, ETFs, all the rest held outside of IRAs that have appreciated significantly. Jill and I do that regularly, honestly, and it can be easier than writing a check. You just give that particular asset to the charity. You get a full deduction for having done that, number one. Number two, you're not paying any tax on it, and neither is the charity.
How do you give it directly without writing a check? How is it like transferred?
It's transferred via the brokerage firms, the respective brokerage firms.
Okay.
Usually that charity will have a brokerage relationship, and you get key pieces of information. And for us, we tell the staff, we want to transfer, as a for instance, 1,000 shares of XYZ fund to that charity. Here's the information, and the client has requested this. So we talk back and forth about it, but it's amazing. If 1,000 shares are worth, I don't know, $20,000, as a for instance, that full amount then goes to that charity. That charity deposits it in its brokerage account and liquidates the funds and uses it for their purposes.
Yeah.
Talk about a simple thing.
And as long as it's been held for longer than 1 year, you also get that full deduction.
Thank you.
So if you bought, I don't know, something that has just gone crazy and doubled or tripled in value in the period of under a year, and you try to do that, you only get to deduct your cost basis of that.
Vis-a-vis silver, which
Yes.
Beth is going to talk about. No, do we need to take a break here, Ron?
Well, can you handle a question?
Yeah,
By
sure,
the way, we are
certainly,
getting condolences for Heidi and her family
Thank
from
you
people.
to each.
Let's see. Someone writes, "Does your business purchase Vanguard stock for individuals? I would like to purchase $50K worth of Vanguard. You or we purchase it while I own it. I know there's a fee to purchase." So is that something a stockbroker does, or do you do that? What is that all
Well,
about?
they would purchase the Vanguard fund directly through Vanguard. Now, unless they have an account with us, which obviously we can do, yes. So we can make those purchases within the appropriate accounts held through Prout.
So
yeah.
if you're a
But-
Prout client, you can do it.
Oh, yeah. Yep.
But if otherwise, what do they go to the Vanguard website and
Yeah.
make
Go
a
to
purchase?
Vanguard.com. Vanguard.com. Thank you so much. Yeah, so, if you want to do that, you're going to hold it then at the Vanguard funds or the Vanguard group.
Okay.
Yes.
We're going to grab a phone call for the panel here. Prout
Okay.
Financial Design, New Retirement Radio, Joanne, New Retirement Radio. Joanne's in Traverse City. Hello, Joanne.
Hi, how
Hi.
are you?
Good morning. Well, thank you.
What's up, Joanne?
Well, my husband and I, he just turned 71 and a half. So we gave money directly out of our IRA to our church. So how does that work on tax purposes? How do we deduct that from? They said that it comes right off the top of your taxes, so doesn't count as income, withdrawal from your IRA. So how does that work? Is that in your field of expertise? We're filing taxes now, and we don't know how to do that. But
All right. Great question. If I may interrupt, first of all, great question. The mechanics of it. So Nathan wants to answer that. Go ahead, Nathan, please.
Yeah, so your IRA or his IRA custodian, so wherever the IRA was held, would have then provided a 1099 for him this year that would have shown that distribution. Now, depending on the custodian, they don't have to do this yet, so some are doing it, some are not, but depending on the custodian, they might show that as just a regular distribution on that 1099. That's what they've historically done. In future years, they'll show that as a charitable distribution, one that's not taxable to you.
For 26, they're going to start doing that. They're required
Yep,
to.
for
yeah.
26,
Yeah.
but for 25, some are doing that, some are not yet. But basically, then you would take that 1099 into your accountant or your tax planning software, and then say this amount, because maybe you took other distributions as well. So let's say 1,000 of it was a qualified charitable distribution. You would tell them that, And then if there was more of a distribution that went to you, you could say, hey, that went to us as normal income. So.
Okay. What if we didn't get one? Is there a way for them to, our requirement?
They would have been required to mail one out to you by January 31st. So if you don't have it yet, again, assuming this was an IRA. Now, if you made this gift from a non-qualified account, those 1099s take longer to generate typically. But again, assuming this was an IRA, you can call the custodian directly and say, hey, we need a new copy. We still haven't received the 1099.
Okay, yes, because it was a IRA that we withdrew the money from.
Okay.
Yeah.
Well, good
Okay.
for you.
All right.
All right. Thank you for the call.
Thanks, Joanne from
Thanks,
Traverse
Joanne.
City there.
Yeah.
Oh, the music starts. So if a 1099, that means that's income for them, right? They took money out of their IRA and
It could be income if they hadn't paid it out as a QCD.
Okay.
Yeah,
correct.
Whenever there's a distribution from an IRA or a Roth, even if it's not income to you, a 1099 will be generated for that.
All right.
Beth Shire's got some interesting stats here for us here
Yeah.
this morning. Let's break this up, shall we?
Change it up a bit.
Yep.
So, yeah, the Social Security Administration reported as of January this year, the average Social Security retirement benefit is $2,071 a month.
2071, the average Social Security benefit. Yeah.
Right? So, strive to be above average and delay.
Yes.
Yeah.
Right?
As your elementary school teacher said, they're well above average, right? Well above average.
What was that? Was that Prairie Home?
Prairie Home
Yeah,
Companion.
That's
yes.
right.
Where all the children are
Yes.
well above average.
That was great. We would listen to that every Saturday night as a
really?
family. Yep. Saturday night it was pizza night. And we would make pizza and listen to that on the radio.
Good
Great
times, huh?
memories.
Yeah.
It's good.
Friday night was pizza night for us.
Okay.
And that was before the pizza had been invented, but Mom invented it. It was hot dogs and ketchup, I think. I don't know. We liked it, but it was a stretch.
It was a unique experience. I remember
it really was.
You didn't pass that one down to your kids, right?
We liked it, but,
No thanks.
nothing like today's. You bet.
That's
Right.
great.
Sorry, go ahead.
No, that's good. So January, on January 30th, gold prices fell by 10%, which was the worst one-day decline since 1983.
When did that happen?
January 30th.
January 30th. So long ago. 3 weeks.
I know, isn't
Imagine.
that crazy?
Yeah.
Yeah, and similarly, silver declined by more than 28%, making the worst single-day loss since 1980.
I think that was a day after I mentioned that they were
Yeah.
really quite high in price on that Thursday, for the record, the 29th. It's nice to be right once in a while, or even partially right. We'll take it.
But
Yeah.
both gold and silver had major gains since January of last year. Gold came in at over 100% gains, and silver was 300%. So
Yeah.
that was pretty wild stuff.
Wild stuff, Ed.
Yes, indeed.
And then, what else did we have? Oh, existing home sales dropped by 8.5% in January of this year, which is the slowest sales pace in more than 2 years. Despite the slowdown in home sales, the median home sale price is still up by 0.9% since last year.
Yeah. I don't know whether people are waiting for interest rates to come down a bit more or whatever. Who knows? Maybe it was just because of the cold. I'm sure certain real estate professionals would have some explanation for it, but I think it's only short-term in nature, frankly. Rates are coming down, so, yeah.
Some people might be adding on or fixing up their home too.
Right.
True.
Yeah, for lack of options. Yeah.
Yeah. All right, so Nathan, you've got some interesting information, the 5 keys to investing in 2026
Yeah.
from Capital Group.
That's right. So this article, as Dennis said, comes to us from Capital Group. And yeah, they had some interesting points. So the first one is bold stimulus could boost the global economy. And really, this is the stimulus as it relates to the U.S.-based companies themselves, not so much directly to the consumer as we've experienced in recent years. But basically their outlook is that this stimulus could really help boost the U.S. economy pretty significantly this year, as there's opportunities for those companies to grow or develop or build stateside that haven't been around in recent years.
All right. So for anyone who invests, either 401k or otherwise, this is going to have an impact, obviously, on you.
It could, yeah.
Sure.
So maybe research some of those companies that might have unique opportunities or access to those incentives to build or develop more technology stateside. One of their next points is predicting some interest rate cuts, which can be good for stocks and bonds. And so if you already hold bonds and there's interest rate cuts, the bond prices can increase, which can help bolster the returns on your portfolio. Those have an inverse relationship, of
They do.
course.
So whether it's a balanced fund or even bond funds, for those who are especially conservative, this may well have a positive impact for 2026.
Right. And historically, they say when the Fed easing cycle occurs outside of a recession, stocks and bond markets have gained while cash has lagged.
Yeah, that's the problem with owning cash. Now, that's a key component here, because guess what's going to be happening, of course, to interest rates and your CDs. Anyone related or any investment related to current interest rates is going to begin to suffer. I had clients already telling me, I went and tried to renew my CD, and previously what had been 4.5 or 4.75. Now they're offering 3, whatever number. So you're seeing those declines start for those who are most conservative savers. So keep that in mind as you're most conservative. What are my options? There may be otherwise out there. And you may want to have a further conversation with your financial advisor, or for those of you who really want to come and see us at Prout, love to have those conversations. Of course.
That's right.
Yeah.
Another point is company profits are expected to rise worldwide. And this really ties into the first 2 points, because as interest rates decline, that can really boost company earnings. And as, of course, those stimulus packages exist, if they're developing more technology or whatever their commodity is that they're selling, then those profits will continue to increase.
Yeah, and it's interesting in terms of a trajectory, 3 years in the running, and for many of those who watch this sort of thing, while it's somewhat concerning, it's amazing. It's happened before. We've had 3 years of running markets, but like anything else, at any given point in time, as with just what happened with gold, these sorts of prices can correct. And sometimes the self-correction and or the discipline imposed can be one of the best things for us all.
That's right. And really the last point I wanted to highlight off of this article is there are always reasons not to invest. So their opening sentence on this section is, a pandemic, wars, inflation, and high tariffs have sent shockwaves through the global economy in recent years. For many investors, sitting on the sidelines as these events unfolded seemed like the most sensible response. Yet, time after time, financial markets pushed through turbulence and reached new highs. And a saying that's been around, we were trying to find the origination of this, but it looks like it started in the 1950s, is that the market always climbs a wall of worry. So take the sweeping tariffs that President Trump levied on nearly all major U.S. trading partners in the spring of 2025, so not even a year ago. The S&P 500 index plunged as much as 18.7% from its peak in February, as investors feared the global economy would enter a deep downturn. But trade deals and continued economic resilience helped calm those anxieties. By year's end, the S&P 500 index recovered and finished up 17.9%. The lesson is not new. There have always been reasons to wait. It was true in 1981, 2020, and today. But markets have been resilient over time. History shows that investors who look beyond short-term uncertainty and remain committed to their long-term goals have often been rewarded. Though, of course, there have been times when markets declined.
Absolutely, and it's a great lesson. I mean, the market was down big time in April of 2025.
Yeah, and in
Oh my
April of
gosh.
20 as well.
Jeez, oh Pete's, and it's just, it seems like, it was eons ago, but those are difficult things to transition, because the news is always front and center with the negativity related to it. So keep that in mind, as you may tend to get perhaps too uncomfortable yourself. Try to anticipate that, how you're going to respond, but also, navigate that. You may want to call. We encourage that for those especially who have concerns about certain markets at certain times. Again, gold and silver is a great example. What are we advising? What do we say about that? What do we think? What are we doing about it? Now, sometimes you can help navigate some of those things by what you own in your portfolio. Sometimes, as happened, what year was it? 23, 22? Both stock and bond markets were down that year for the first time in 45 years. I think maybe it was
22.
22, yeah. So, sometimes things go awry, if you will. It just is difficult navigating. But given the diversification that you've got in your portfolio, the fact that you have some assets that perform when others are going up and others are coming down, how are you navigating that? And does it sound, or is it a sound strategy for you to try to play defense and offense at the same time? How can you continue to play offense? A great example, I can mention a company called NVIDIA. Their earnings blew away the estimates. Most recently, I think it was yesterday, they came out with earnings. Now, I'm not promoting NVIDIA as a stock-owned company. That it's in the stratosphere in terms of price. But it's a great example where many naysayers were concerned that they were going to be able to continue to achieve the kind of results that they have. But with the demand for their products, their chips, their advanced chips are off the chart as well. So investing in great companies, good companies tend to do good things over time. So for those who are managing your funds, and as well for the companies that are managing those assets themselves to try to grow into the future. Google is another good example of a great company. 6 different major sub-companies, if you will, within Google. So extremely diversified. And then that's as far as I can go in mentioning stocks. Each of them have their own risks and issues related to them. Well, Google, is so priced so high and all that. I get all of that. And I'm not, again, promoting that you purchase such things. But it's amazing how they've appreciated just in the last year. For perspective's sake, that may be helpful. All of us need to hear it. I think it's just history. How do we get through those times with our portfolios? And do we have the confidence that we need to navigate that? Yes.
Did you know, I'll ask this. What's the largest retailer in the country, would you say?
I would say it's probably Amazon or Walmart, but what do I know?
Amazon just surpassed Walmart.
Did they really?
Wow.
Yeah, I think I'd seen that. Yeah.
I feel like they've been trading almost in the recent years as far as who's bigger than the other one, but maybe not.
And the other thing, in time left, if you have an opinion yet, if you heard the President's State of the Union the other night, he wants to provide $1,000 matches up to $1,000 for workers who don't have that opportunity where they work, where they don't have a 401k plan with a match. So what kind of impact could that have?
Well, it'd be significant in terms of investing and bringing it closer and making it more the norm for everyone. I would say to continue to push that down in terms of savings opportunities for the middle class, for everyone, because we all have the responsibility to save for ourselves. But as Beth was mentioning, what's the average Social Security check right now?
2017.
Yeah.
2071. Yeah.
2071. So 2071. So any of us wanting to retire, if we can put a portion of the funds that we have aside for those that did it, it's interesting to know, what do they say when they're 60 and 65 and 70? Well, conversation yesterday. My wife and I always had that sense that no matter how well we were doing, we were going to try to keep putting some money aside, which we did. And I'm glad we did now, because the number of decisions you get to make because you made that difficult decision so many years ago to save, it's fun. It's dynamic. And for some, it's almost a part-time job at retirement. It takes a fair amount of time keeping after this stuff, and why not? Help us engage.
It would be interesting in high school if they don't do it now, though. And it's hard to tell young people to think ahead, but just to tell stories and say, here's Jack who didn't save, and here's Mary who did, and different outcomes, just to make that impression early.
To not have that flexibility at age 70 is very different than at age 30. And I get everyone has issues, setbacks, the whole thing. But if you continue to be driven toward saving some of it, it's the compounding, the effect of compounding. Almost every time I run those figures, I'm surprised what $200 and $300 a month makes. So again, you can make those decisions later about how can we further allocate, how can we diversify appropriately, what are the opportunities that we might see now. Those are great questions to ask your financial advisor, to be actively engaged with them, to have those conversations. That's the fun stuff, We have a bit more time yet, Ron, or where are we?
Yeah, we have about 4 minutes and lunch and learns. If we have any of that information or other topics coming up in 4 minutes.
Yeah, absolutely. So apologies, we did have to cancel our February Lunch and Learn, and we are working on rescheduling that, and then we will reach out to the people that did sign up with a date as soon as we have that. And March 18th, we have tax planning initiatives and Roth conversions. And we do have a couple spots left, so if you are interested in that, you can either go online, sign up that way, proutfinancialdesign.com, or you can always call the office as well, 231-947-3992. And then April 15th, we have estate planning wellness check. And we're going to have local attorney Courtney Danbrook coming in and speaking on that one. And that class always fills up very, very quickly. We do have a couple spots left, and you can sign up the same way. So.
A couple of home run classes.
Right.
That's exciting, honestly. Really.
Lunch and Learn at Prout's headquarters, and no charge.
No charge, free lunch.
And they're installing some sound panels there this morning even, and it should be easier to hear than it already was. So there's one note here I wanted to make. After 3 years of double-digit returns, they asked Rob Lovelace, the grandson of the founder of Capital Group, who was Jonathan Bell Lovelace, what's your outlook for global equities in 2026? And he says, my starting point would be, does it matter that we've had 3 double-digit up markets? I'll just start with a blank piece of paper, which I think is a good way to start any year. Corporate profits in the U.S. are strong. They are generally concentrated in certain sectors, such as tech and related areas, but financials have also been strong. With higher interest rates, banks are generating better profit margins. See, he goes on to say, there are always opportunities. And that's what these money managers are continually doing. Does it preserve you from any negativity? No. The markets, again, always come down. But how do you navigate that? And how do you, again, go through the ups and the downs? You can put it back in your own personal relationships, whether it's with your children or a spouse. hopefully you're navigating it with some brevity and patience. You know, you're an idiot, but I'm still going to keep talking to you, whatever that is. So navigating the vicissitudes of relationships can be almost like navigating the difficulties, the ups and downs of the markets. Who, knowing that their house value is worth less today than it was a year ago, go out on the street curb and put their house up for sale? No. You know, we're going to continue living. It's almost funny making that illustration, isn't it? But we all know that they have their ups and downs depending on the moods and the psychology of things and where interest rates are. But generally right now, we have a very good environment for investing. We have a good environment. The soil is there, the sun is there, and all as well as the water, if you will. It's all there in lots of availability. Well, how's that to put it? I don't know how else to say it.
You sound
very
like you're
poetic.
Peter Sellers. Did you ever see the
Peter Sellers. That's great.
What
yes.
was that movie where
That's such a funny movie.
he was the gardener? I forget the name of that movie.
Gardner.
Yeah.
I can't think.
He's
of
a very simple man.
a very
But the
simple man.
president thinks he's a genius because he talks in terms of.
Yes, that's kind of how he said it too.
He did.
Exactly.
All right, that'll wrap up another edition of New Retirement Radio with Prout Financial Design, 947-3992, 231 area code, and ProutFinancialDesign.com on the web. Dennis Prout, Nathan Prout, Beth Shire, thank you all.